Good afternoon, this is Todd Colvin coming to you from the floor of the CME Group. We are looking at metals and gold prices. Finding a home right at the midpoint of the year-to-date price action we've seen right around 1305 or a little below it, but we've kind of danced around that level most of the latter half of the week, and it seems that the market is waiting for something. I wonder what that could be. We've got a big week next week. We'll talk about that later, but I think that right now the market is we're finding a home. We need to see a breakout move maybe north of 1320, which seems miles away, or we got to get back south below 1290, 1285, 1290. That seems like a pretty far trade from right now. We have a lot of data to absorb over the next week or so. The market is now waiting for that. We're sitting right at the midpoint, so we're precariously waiting for which way we're going to fall, up or down, but essentially the market is in ready, prepared mode. And if you look at the dollar did help gold hold its bid this week a little bit. Dollar ended a streak of 7 consecutive weeks of higher highs in the dollar index. Didn't mean higher high settlements week over week, but just we priced it higher highs. We saw a modest pullback in the dollar. Sure, we've got G7 talk. We've got issues going through not only with NAFTA, with Europeans, and a lot of Twitter wars going on. But ultimately, the dollar will wait and see what happens next week as well. It's all kind of focusing not merely on what's right in front of us, but next week. Obviously, the big events next week in the U.S., we have inflation, we have auctions, we have an FOMC meeting with a press conference and an expected rate hike. Likewise, we also get central bank meetings from the ECB and the Bank of Japan. So there is a lot going on that can really influence the dollar, which will then in turn influence gold prices. And I think that right now the risks of G7 versus South Korea or North Korean summit between the United States and North Korea next week, those will also have a play in gold. So right now we're seeing not only the data play on gold, but it's also you've got some of the geopolitical risks that we have that are on the rise out there. And if we want to look at positioning, we saw the speculators get back in between the week of May 22nd and May 29th. We won't get the numbers until later today for whether or not they got back in, but I think they started to add back in small, and it's another one of the reasons why gold didn't see much of a sell-off. We did see liquidating of some assets across the board over the past week and a half. Gold was not one of them. I think that speculators are likewise waiting for what's going to happen from the Fed, waiting to see what happens with G7, but ultimately they got so out of all their longs and they started to get back into them quietly. I think that's what we're going to see, just a small add to speculator longs. And then obviously once we get through FOMC and all that other information next week, we'll have a clearer picture as to where the speculators rest. But right now, I think that the market is waiting for some kind of confirmation, waiting to see how the Fed projects its second half growth, second half guidance for 2018, because there's still a lot of questions about how GDP, if it comes in lower than the 2.5%, 2% levels that we've been getting, how that is going to affect Fed rate hikes, and then in turn how it will affect the dollars. Right now, gold holding at the midpoint of the year. So we have a huge week of data coming up. This is Todd Colvin coming to you from the floor of the CME Group.